Arizona housing prices have been climbing for months now and have really broken just about every record possible for pricing. Now, I started talking about cracks in our armor a few months ago, but no one really knew when we would finally kind of see that big crack. Well, June. June is when we saw the big major change. So what does this mean for the overall market? Are we headed for a balanced market? Are we headed for a buyer's market? And are there some opportunities in here for buyers, even though the interest rates are where they are? So buyers that are still in the market, are you glad to see more homes coming on the market, even though the interest rates are going up? Or are you a buyer that has now gotten out of the market because the interest rates have gone up? And what was that tipping point for you? I really want to know. Post it in the comments down below. But make sure you listen all the way to the end, because there could be opportunities in this market for you that you're just not aware of. So I'm continually asked by both buyers and sellers right now, like, Shawn, what do you see going on in the market? Like, what is happening? Here's what I'm telling them, because here's what I see. There's a few things happening. So number one, we are not a market that sees a normal upswing in our sales during the summer. We just don't. That's our downtime. We do not have that normal rush of everybody wanting to buy during the summertime in our market. Why? It's hot. Don't know what else to tell you. It's hot here. People want to go on vacation. They want to get out of town. What have people not been able to do the last 2 years? Go on vacation and really get out of town. This year, most of the people that I know are definitely doing that. They're traveling. They're getting out of town. They're not really focusing on real estate. So I do believe that right now we're seeing our normal seasonal slowdown. Just a few weeks ago, we saw the Fed raise the interest rates again, and they've told us they are going to do that multiple more times throughout the year. And our interest rates right now, they're at 6+%. So overall, that's not necessarily helping people want to rush to the real estate market, especially because they've heard all the other people that have gotten 2%, 3% interest rates. 6% for most doesn't sound that appealing. We're going to talk about that. So the other thing that I'm seeing right now is we are definitely seeing an significant increase in inventory. This is a welcomed sign for all the buyers that are still out there looking for a lot of reasons. However, it just happened to come at the same time our interest rates went up during the summer, and all of these things coupled together has really kind of put a slowdown on our market. And with that, what does every headline say? Prices are falling. So the quick answer is yes. List prices are going down. Sales prices are not dropping that radically. They are slowing significantly, but they are not dropping like the headlines would lead you to believe. That is the list price, not the sales price. So let's take a look at some of these charts that is going to further explain what I've just talked about. First, I want to show you this graph about the Cromford Market Index, which we've talked about before. Now, this graph looks ominous. I'm not going to lie. I mean, this steep decline right here, it's crazy. And everyone feels like this is us falling off the cliff. But I'm going to give a little glimmer of hope. So this chart just came out today. This is their daily observation for today, which is June 21st. Another look at the plummeting CMI daily chart shows just how far down we have come from the red hot market in January and February. There is a glimmer of hope of positive news from this chart, however. The rate of decline from the CMI has peaked and is now starting to fall very slightly. The highest rate of decline was 9.12% per week during the second week of June. This has now eased a little to 8.94% per week. So what does that really mean? It means that the rate at which this is falling is slowing. So not by a great deal, but it is slowing. So let's just keep in mind that the CMI is still in the 200s, which means we are still in a seller's market. We are just seeing our sales pace, which was so fast, slow down pretty rapidly, which is really throwing the sellers. Okay, so we see that Cromford Market Index declining. So what is one of the factors that changes that drastically? Well, it's supply. So let's take a look and see what our month supply looks like. So this has also changed drastically. Again, I want to just point this out because we're in June. These are normal dips in our month supply. A lot of times what we see, especially in that luxury market, people pull their homes off the market. They don't leave it on for the summer. They know that a lot of the buyers looking in those areas are not here and they're not looking, so they just take their homes off the market. So we will see a decline in homes on the market during the summertime. It is a normal thing for us to see, but we've not seen anything normal in the last 2 years. So, but I just want to show you over time, right? So this is July in 2015. All of these dips are June, July, sometimes August. There's July, There's June. There we go, July and August. And this is March. So now we're in 2020, and we all know what happened in 2020 in March. So this is what we started seeing. Then we get into right here. None of this is normal. So we hit our highest peak right here in 2020 in May of 2020. We had just been into our shutdown for a few months now, and our supply plummeted down here. And then we saw 2 years. This was 2 years that we saw below a 1 month average of homes for sale. Historically low. We've never seen that before. And right now, this is what we're starting to see. We're starting to see a spike. Now, this was just a few days ago, and we're finally at 1.4 months of inventory on the market. We've not seen that for a very long time. So we're starting to see more supply during our summer after interest rates just spiked. Triple whammy. Bam, bam, bam. Not the best time for all of these things to be falling into line, but it just is happening. So what is happening with some of the other factors that we can see from this? Okay, so we just looked at the month supply of inventory. And now, how many does that mean? Like, how many are we talking about? So let's take a look at that. And here it is, our active listing count. Again, we've just come through something that is just not normal. We've not seen 4,000 listings on the market ever. And this was back in 2021. And then we saw it rise. And I talk about this also in my videos in the past. In 2021, towards the end of 2021, we started to see an increase in inventory. Our market was shifting, it was softening just a little bit. And then it fell right back down into 2022. We saw our price points skyrocket. And now look at what's happening. We're starting to see a massive increase in our active listings on the market. We're now at 11,000 active listings on the market. We have not seen that many listings on the market since May of 2021. 2 years, we've not seen this many listings on the market, active listings on the market for people to actually choose from. This adds so many more options to these buyers that are out there looking. Okay, so now we've got increase in inventory, we've got increase in interest rates, we've got people that are not buying as often as they were before because they're out vacationing and it's summer and it's hot and all those things. So what happens next? We're starting to see price decreases. And it's the headline of all headlines is this massive price decrease in all of these other cities. But remember what I said, these are list price decreases, not overall sales price decreases. Because remember, the sales price is the lagging indicator. It's usually the last thing to change. So let's take a look at what is actually happening. Well, as you can see from this chart, we are seeing our price decreases spike. We have 2,640 price decreases in the week of June 12th. So you can see that we are seeing an increase in price decreases. I see it. Everybody's seeing it. These emails get automatically sent to these buyers that are out there looking, and it is price decrease after price decrease after price decrease. But I'm going to tell you this, the same thing that I've said in other videos. I really do believe that some of these homes are priced too high to begin with. These homes, some of them have been on the market now for 3 weeks. So that was back in May. If people were not paying attention, they did not realize this shift was coming. So they were still pricing it too high, thinking, oh, I'm just going to test the market. Bad time to test the market. Really important for sellers then and now. Really important now for you to make sure you're pricing your home appropriately for our current market. Because we talked about price decreases and we talked about how many listings that we have coming to the market. So what is this doing to sales? What is it doing to the amount people are actually getting for their home? Now I'm going to show you this graph, but I just want to just preface this by saying that this is June, but understand that these people put these homes under contract back in May. So we are still showing that people are getting over 100% list price to sales price. That's the ratio that they're getting. They're still getting over 100%. So what I can tell you is that this number, this 100.3, when we get into July next month, this 100.3 is going to change. I believe it's going to be closer into the 90s. It might be 95 to 97%. That's about where we normally sit. So this metric right here is slightly skewed just because, again, those homes were put under contract back in May and we are now in June. Things have drastically changed. So in July, I do believe that number is going to be different as well. Why do I feel so confident that these prices are going to change? Well, let's look at this other chart. So this is going to show us our weekly market conditions. And what this really tells us is that our accepted contracts have come down. So the number of our accepted contracts have come down. From June 12th, we only had 1,898 accepted contracts in that week. It was up a little bit the week before, down a little bit. We're just really in a jagged line. Again, some of this is because of the summertime. It's just that time of our year that we see this normally, but some of it is because we are in that shifting market. As we move down this chart, we've talked about this in the other videos, we're looking at days on market. And as you can see, this is starting to climb even higher. I think the last time I did my market update about this, it was in May and we were at 11. We're now at 12. It's come down to 11 days. Again, I think it's going to just continue to creep. I watch this every single week and I watch the market every single day. And I see homes that are on the market so much longer than what we used to see. For the past 2 years, think about that. We were at seven days on the market. And again, we've talked about this. I think that this is an inflated 7. I think really it was 2 to 3. That was the reality of how long it was really taking homes to get under contract. Then as we come down this chart, again, average list price per square foot at contract acceptance. Again, we saw this was in May 8th. We were at 303.53 price per square foot. That was the median list price per square foot. We've started to decline here. We're now at 297.80 for the average list price per square foot at contract acceptance. So all of these numbers are coming down and our days on market are going up, which just means things are going to be a lot different in July. So whenever I start talking about things like this, and it's that, yes, prices are coming down. We are seeing a shift in our market. Everybody wants to start talking about crash. I've talked about it on the channel as well. Do I think that we're heading in for a crash? I do not. Let's get that out of the way right now. I do not think we are headed for a crash. I do think we are headed for a correction. I think we are going to see a flattening in prices. I think we are going to see a decrease in home values a little bit. It is not going to be like what we saw in 2008. This is very different. We do not have predatory lending going on at this point. But whenever I bring up all of those things, everyone immediately goes to, well, here come the foreclosures again. So again, let's take a look at that. Here is the notice of trustee sale. We've talked about this on my channel before. Notice of trustee sale still gives you 90 days to get out of this notice of trustee sale. It doesn't mean that the home automatically goes to foreclosure. So again, let's go back and take a look at 2008, 2009. This was the height of our crash. All of these foreclosures. I mean, we were at the height, we were at 10,500 foreclosures, notices of trustee sale that did go to foreclosure. Now, let's take a look at where we are right now. We come down, and again, we talked about this before. This was the moratorium. Nobody could be foreclosed on. So this was very just flatlined. We did see a little bit of a spike, 427. If you want to call 10,000 from 10,500 to 427, a spike, we'll call it a spike. But it's come down. So the foreclosures are just not happening. All the people that are thinking, I'm going to wait for those foreclosures to come, they're just not happening. The numbers are not showing us that foreclosures are coming. So I think it's really important to share this information so that you're getting the right information, because it's important for me to make sure that you have the best information possible. I can't tell you how many headlines that I read. I'm going to take this away so you can see me. Headlines that I read that literally you read the headline and you think the world is coming to an end. And by the time you get maybe 3 paragraphs in, they're really talking about the opposite than what their headline said. So with all of this said, what does this mean for buyers? Well, it means that there's some opportunities out there for you. Now, I know I sell real estate for a living, and this is how I make money. But I have said this before. If it is not the right time for you to buy, do not buy a home. Do not stretch yourself. Do not put yourself in a financial situation that does not feel comfortable. I am not for that. I do not advocate for that, but I do advocate for those people that can do it. I would still highly suggest that you do it. Why is it such a great opportunity for buyers? Well, it is going to allow you to have the flexibility back in the contract that you did not have the last 2 years. No more waiving appraisals, no more waiving inspection periods or shortening inspection periods. You'll probably actually be able to ask the seller to do things and they will do them. You will not have to allow the seller to stay in the home for free. until they find a new home to buy or until they can move. And the best part, you will likely be able to negotiate on the purchase price. So I know with all this said, you're still thinking to yourself, but the interest rates are still so much higher. And you're right, they are. So if you buy now and interest rates go up, but prices come down 5 to 10%, the reality is you're still going to be paying more money. So oftentimes the money you think you're saving by waiting, you've actually lost. Okay, so as we've just talked about, we are still technically in a seller's market, although it is changing pretty dramatically. And if everything stays the same, we will be in a balanced market by August. Could we slide then into a buyer's market? It's possible. But we just have to see. Again, we've talked about this, that we are seeing a seasonal slowdown. We've got to see what else happens with the interest rates and how much more they rise or not. Some forecasters are saying that we could see a decrease in our interest rates here within the next few months, but time will tell. That doesn't change the fact that if today, right now, you can buy and are capable of doing it, that you should absolutely 100% look into buying, that it will be a pathway to wealth for you and is a great option. So buyers, one of the other areas that could be a really good opportunity for you is new home construction. Why? Because just like I said, when I recorded this video about the major issues that new home construction is starting to see back in May, on May 24th, and I told you, wait, I'm going to be watching for these incentives coming. Guess what's coming? Incentives. Not only incentives, but new home construction builders are starting to talk about doing rate buy downs. This is a great opportunity for you to go in and take advantage of any of those incentives that they are offering at this time that they were not offering just a few months ago. So how long did that take from the time that I recorded that video to now? It took about a month for builders to do their incentives like I knew were coming. Again, great potential opportunity for you to check out if you're looking for a new home construction home. But I want to also show you this chart, which is going to show you historically what interest rates look like as well as during a recession and what happens. So the reality is that if we go into recession, some say we already are in one, but if we go into recession, interest rates spike, which is where we're headed right now. At the end of the recession, historically, interest rates come down. And at that point, you can refinance. So you've gained equity in your home, you're refinancing into a lower interest rate, and you've gained wealth over time. And so this chart right here is the big one that I really, really, really want to draw people's attention to, because it is scary to think about interest rates rising as high as they are right now and could potentially go higher, and they likely will. But if you secure a home now that you can afford in a fixed payment and interest rates go down, that's when you refinance and your payment will go down. So it is not a bad opportunity for you to buy if you can afford it. So buyers, if you are in that position, do not shy away from this market. There's opportunity out there for you. Okay, so I know I just threw a ton of data at you. I hope that was helpful and not overwhelming. That is the goal always. If I can answer any questions, please feel free to reach out to me. My contact information is all down below. As always, I thank you for watching, and I'll see you next time.